Hello, everyone. Welcome back to another week as we are going to be doing another exploration of the Forex financial market. It's a new week. Happy Monday to every one of you. And first of all, I would like to sincerely appreciate every single one of you who had checked on me personally behind the scenes and even right on the public platforms. I really do appreciate your kind gestures. And in fact, I'm very well at this point in time, strong and ready to get the new week started. And in fact, we have very interesting and simple setup that we are anticipating ahead of the new week. So once again, you're all welcome. My own name is Sheriff Daramola, and for the next 30, 40, 45 minutes, I'm going to be your host as I will be taking you through the financial market using simple parameters such as trend lines, key levels, and of course chart patterns to gain valuable insights into the historical price movement of the assets on our watch list for this week. Well, for this week, we have three major assets we are going to be looking at. We are looking at the GBPUSD, we are looking at the XAUUSD, which is popularly known as the gold spot, and of course, we are also looking at the USOil Spot. And all these three assets, I think I only publicized two out of the three assets. So we are going to be doing a top-down analysis on the USOil Spot. And for those who are joining us for the first time, you highly welcome on board. I'm very excited to have you around with us this morning. And you might be asking, what is this all about? Well, as technical traders, we gather here on a daily basis in anticipation of both the London and the New York session, where we come to review our existing positions, if we have any, and of course use the information we are able to identify on the current market structure to position ourselves and ahead of both the London and the New York session. So we do this on a daily basis, 9:05 a.m. West African time, 8:05 a.m. UTC. So I encourage you to stay tuned in so you don't miss out on any of these valuable ideas we shall be deliberating on today, and of course be part of our subsequent editions, as the more time you spend with us, the better you get to understand how to use the strategy and eventually be able to make your own independent trading decision using the information you gather from this community. So once again, you are highly welcome on board. So with that being said here, and secondly, I do hope you've watched my videos on the GBPUSD and the XAUUSD. It's very important you watch this video in preparation for the session, as the Forex Morning Mastery is basically a follow-up session on this asset. So if you had not watched those videos, I have them right in the links in the description. I have the links in the description box of this current video you are watching right now, so you might want to check them out after the session. And one important thing about watching the video is, first of all, you get prepared for the session. Secondly, you get to understand how we were able to identify the key levels we are going to be using for this week, because basically what we focus on here is the 1 hour time frame, which is of course our execution time frame. So I encourage you to watch them. And thirdly, of course, it also serves as an educational tool that you can use to perfect your skills in understanding how to use price action to identify trading opportunities. So with that being said here, we will be diving right into the business as usual. And of course, the first thing we want to be doing this morning is to check on the economic calendar, of course. And I do have some questions most of the time as regards to why do we really need to check on the economic calendar? Well, understanding the economic calendar isn't just about fundamental analysis, basically. It's a crucial aspect of technical analysis too. And by looking at the economic calendar, we can easily identify potential correlations between key economic releases and of course specific technical patterns on the chart, which will give us valuable information to help us position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So on the economic calendar, we usually focus on high impact events from the economies that affects the assets on our watch list. And for this week, based on the asset we are looking at, remember we are looking at the GBPUSD, we are looking at the XAUUSD, and of course the USOil Spot. So we are going to be focusing on the United States and the United Kingdom economic docket for clues into what everyone is looking forward to from the fundamental perspective. Now, for Monday, October 23, we do not have any high impact event basically. So in the absence of no high impact events, I was able to include the medium impact event so that we can have something to look out for and guide our trading decisions for today. Now, the first medium impact event is coming in from, okay, we really do not have, we have just very low impactful event like the Chicago Fed National Activity Index, the 3-month bill auction, and the 6-month bill auction, which are really not significant events that has a tendency of influencing price action. So in that regard, we will just be diving right into the current market structure, and let's look at things from a technical standpoint, and of course using that to identify and position ourselves ahead of today's trading session. So the first asset we are going to be looking at this morning, let me see what we have here. So the first asset we are going to be looking at this morning is basically the USOil Spot. And remember that the USOil Spot has been one of the most profitable assets on our watch list in the last couple of weeks, especially following the Israel and Hamas situation going on in the Middle East right now. And if you would ask me, we'll say that the reason why that is simply because of the fear of tampering with the supply chain of oil across the globe, and considering the fact that this area is where oil production is more known to come from. And I think last week we were hearing some development as regards to the United States and Venezuela striking a deal where they will be lifting some of their bans so that they can actually push some of their oils into the market, which in the long run will increase the supply chain in the market. And of course, when a supply chain is increased, price drops to the downside because there is surplus of it in the system. Now, because of this, we saw a little bit of bearish traction last week. But as you know, we saw what happened during the later part of last week. We saw another momentum build up. Now, going into the new week, are we going to continue to see the momentum rise this week, or are we going to be seeing price drop to the downside? So let's look at things from a technical standpoint. And to do that, the first thing I did here was to run through the daily time. Is it a daily time frame? Let me see what happened on the daily time. Okay, I think I started from the 4 hours time frame. Now, on the 4 hours time frame, what I did here was to take into consideration the nature of price action in the last 3 months. That's August, September, and October. And if you look at this structure closely, the first thing I was able to identify here is a pattern which obviously looks more like a downtrend continuation pattern. If you would ask me, it's like it's a falling wedge. Is a wedge, and let me give you a visual representation of what I'm talking about here. So you see we have the impulsive move to the downside since the beginning of this month, and price action transition into a consolidation phase, which, as you will see, we have a wedge form on the chart right now. Theoretically, when we have this kind of structure on our chart, the next thing we want to be looking at is a breakdown of that support line to incite a sell-off to the downside. But most of the time, it's not all the time that this kind of situation happens. Of course, this is just a theoretical understanding of the current market structure. So there are times that this kind of structure fails and price moves in the opposite direction too. So we are also going to be taking these two scenarios into consideration while we make our decision for today. Now, in addition to that pattern here, I was able to spot a key level which has played a major role in determining the direction of price action since the beginning of the month of September, and that key level falls exactly along the $87.50 level, as you will see right here. And if we take a closer look at what has been going on since the month of September, you will see how that zone here was initially a selling niche, as you will see throughout the first couple of weeks of the month of September. It was more of selling, as you will see, sellers negating all attempt by the buyers to break out of that structure. And not until during the later part of the second week of September that we finally saw the breakout of that structure. And for about 3 weeks after that moment, price remained above that $87.50 level to emphasize the strength of the buyers in that market. And not until the beginning of this month that we saw the breakdown of the structure happen, which was as a result of the US-Venezuela deal which was going on behind the scene, and majority were very skeptical that this might likely come through, and if it does, we might likely be seeing a crash. And as you see, we saw the anticipation of it brought into play that breakdown of that key level at the $87.50 level. And in the last couple of weeks, price had gained some momentum back again in the absence of no deal so far. And of course, the Saudi government has also been very positive that they're saying that they will ensure that the supply chain is not broken and that things will go on as normal. And this gained some confidence in the market, and you saw some buying pressure come in, bringing price back into that level. And in fact, last week we witnessed the breakout of that structure, bringing price back into that level again at the end of last week's trading session. And at this point in time, you would agree with me that based on the information we have gathered here, it is quite clear that we are at a very crucial moment in the market right now. And of course, you know how we use our key levels in this community. As long as price action remains above that key level, we want to be looking out for patterns and structures that support the idea of buying that asset. But if price drops below the key level, we want to be looking out for patterns, structures that support the idea of selling. Now, if we zoom right into that area, you will see that since the beginning of this week, price action is actually back into that $87.50 area, hereby respecting that ascending trend line that we have here. Now, if price remains above this ascending trend line and we begin to see buy pressure on the lower time frame, then definitely we do want to be part of an uptrend situation where if price goes on to break out of the $89.50 level, which happens to be the highest point price action got to last week, then we want to be joining more buying opportunity here. However, if this ascending trend line here is broken to the downside, then we are likely going to be seeing signs that there will be some momentum shift here, where a retest of structure will be a beautiful confirmation to join the decline to the downside. Now, as we get prepared for both the London and New York session today, how do we intend to capitalize on any potential opportunity? So what we are going to be doing right now is to scale down into the 1 hour time frame, where we want to see how the market participants in this environment has been reacting to that key level that we identified at the $87.50 area, which of course will be giving us an insight into what is going to be happening this week, or at least for the first half of this week. Now, scaling down into the 1 hour time frame, we'll begin to see things more clearly. So this morning, while I was trying to dissect the current market structure, this was what I was able to come up with. As you will see, there was actually a bearish gap. As you know, price closed last week around the $87.95 level, and in fact this week started at around the $87.60 area, just exactly around that key level we identified on the higher time frame. Now we saw price drop down. The week started on a bearish note as we saw price drop down into the support line at the $86.60 level. I consider that to be the support line since this is the lowest point price action has been for this week, and immediately price tested the $86.60 level. We saw buy pressure resume, bringing price back into that level where it started this week at the $87.60 area. And with what we have right here, we have a simple flat channel to work with for this week. As you will see now that price action has been confined within this range between the $87.60 level and the $86.60 area, a $1 range to emphasize the level of uncertainty in this market right now. And with the way things are going, it's more like a risk-averse sentiment in the market right now, where everyone are not really sure of what the next course of action would be. And as a result of this, we want to be exercising patience. You know how we do it in this community. Whenever price action falls into this kind of range, we have no other choice than to exercise patience and wait for a signal to come, which of course will come either in the form of a breakout, retest of the resistance line to give us an opportunity to buy, or the breakdown, retest of the support line of that range to give us an opportunity to sell. Now, considering the fact that we are in a strong bullish momentum in the last couple of weeks, I'm of the opinion that having a buy stop order above the $87.60 level makes quite a lot of sense. And one of the reasons why I have said this is simply because of the fact that above the $87.60 level is simply also above that key level we identified on the 4 hours time frame. And whenever price is above our key level, you know what we do. We want to be looking out for patterns and structures that support the idea of buying that asset. So at this point in time, you place a buy stop order above anywhere around the $87.50 and the $87.60 area to capitalize on buying opportunity, or wait for breakout retest of structure to incite an uptrend scenario. However, considering the pattern we saw on the higher time frame, remember we saw this wedge on the higher time frame which was suggesting a downtrend situation. Well, if price is going to fall through with that scenario and price remaining below the $87.50 level, then a breakdown of the $86.60 area will be welcoming selling opportunity. And if that is going to be the case, we'll look out for more opportunities. Let me bring out my line chart here and let's mark out this level at the $85.55 area. So we do want to be marking that level out on our chart. So $85.50 area. So if price action goes on to break down that structure, we'll definitely be looking out for more selling opportunities in this market. And if price remains above our key level, I think we identified something here on the 4 hours time frame. Hold on a second. Okay, we have the $89.50 level here. So I would like this also to reflect on my lower time frame. So okay, I think I didn't do that correctly. So I would like this to also manifest on our lower time frame. So we have beautiful. So we have the $89.50 area. So if price continues to the upside, we have multiple levels that we can use to maximize our potential here. So our center of focus for at least the first half of this week on the USOil Spot is basically between the $87.60 and the $86.60 area, where a breakout or breakdown of that structure will be giving us an insight into the direction of where price action is likely going to be going for today. So let's see how the market will play out in the next couple of hours. And trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. So I don't know if you have any questions whatsoever as regards to my illustration so far. If you do, feel free to let me know in the comment section. So For the next 10 to 15 seconds, I will take a pause and wait to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So I see a couple of comments here in the comment section. Mokal Aupori, good morning to you. I hope I pronounced your name correctly. You say Kiora Sheriff. I'm not sure I understand what language that is, but I want to assume it's a compliment. How are you doing today? I'm glad to have you around with us this morning. Sheriff, my namesake Abdul Kadiri, good morning to you. Glad to have you around with us this morning, and thank you very much for the positive energy so far. Thank you. I really do appreciate from the bottom of my heart. So, in the absence of no questions, I do want to assume that we are all on the same page here, and in that regard, we shall be moving on to the next assets on our watch list. But if you still have questions, feel free to drop them in the comment section. Trust me, I am here and willing to be of help in that regard. So moving on right now, the next asset on our watch list is the GBPUSD, which is popularly known as the cable market. And in fact, we have a very interesting setup going on right now. I already had the buy position triggered. Unfortunately, I'm already in a loss right now on this buy position. I'm just hoping that price will continue to the upside as expected. So first of all, for those who are joining us for the first time, if you don't know, I did a video on the GBPUSD this weekend in anticipation of this new week, where I projected what my expectations are looking like and how we intend to either buy or sell based on the current market structure. So I will encourage you to watch that video, because basically we are going to only be treating the 1 hour time frame during the Forex Morning Mastery because of my time. So watch the video. The links are right in the description box below. Check them out, or you can go onto my channel. You will find the GBPUSD. Now, let's run through what the current market structure is. And for those of us who are with me on both my TradingView and Telegram platform, you must definitely have gotten an update as to how we are going to be managing our positions for today. Now, the way things are going right now on the pound sterling, we can see that price action is still above a very robust demand zone. Since the last week, in the last couple of weeks, in fact, we saw how price has been on a very strong, robust demand zone. However, I'm of the opinion that this is as a result of the latest development in the U.S. economic docket. Remember, the Fed chairman had a speech last week, and from what he said, he was talking about interest rates policy balancing, in which simply means that there is a chance that we might not be witnessing any interest rate hike in November. And we also had some speeches from the Fed officials like Harker. Which other name is that? I've forgotten. Like 3 Fed Reserve officials had speeches last week, and they were inciting the idea of unchanged interest rates and a potential interest rate cut by the first quarter of next year. And this is a very, very strong signal into the market, as majority of those who are holding on to the dollar may at this point in time want to be selling to make their profit before the interest rate drops. And because of this scenario, I'm of the opinion that the dollar is likely going to be crashing, at least maybe in the meantime at least. And if we look at the GBPUSD chart here, if you had watched my video on the GBPUSD, remember that we identified this temporary demand zone, which has been very prominent since the last week of the month of September. As you will see, that area between the 1.2100 area and the 1.20500 zone has been a strong barrier, negating all attempt by the sellers to break through that structure. And of course, if price remains above that demand zone, we have no other choice than to continue to look out for market conditions that support the idea of buying. Now, in addition to that demand zone, remember in my video on the GBPUSD, we talked about the momentum, the bearish momentum that gripped this market in the last couple of months, which was as a result of the not too good economy situation of the United Kingdom, as the interest rate high has been having an adverse effect on the United Kingdom's economy. The high interest rate has reduced the ability to enjoy credit facility, which in the long run affects our businesses and of course affects the employment condition in the United Kingdom. And this has really affected the pound sterling in the last couple of months. And we've saw price drop to the downside, finding lower highs as a result of that. So we have this trend line here, which is going to be serving as a major guide in determining if price will be going to the downside. Now, if you notice this, despite the lower highs in this market, you'll see that price is yet to find a lower low, which is a clog in the wheel for sellers at this point in time. So if we are going to feel comfortable selling the GBPUSD from a long-term perspective, we would like to see price drop and take out all the buy positions within the 1.21 area and the 1.20500 level to give us a sign that sellers are gradually gaining the momentum back. That is from a long-term perspective. But that does not necessarily mean that there will not be some selling potentials, probably into that demand zone, probably to inside an uptrend scenario, which will be dovetailing to, let's see how many pips that is, about 80 to 90 pips that is. That's a lot short-term trader. If you're a day trader, you might want to be capitalizing on that. So now let's zoom into the current structure right now and see what is going on here. Now, in my video on the GBPUSD, I laid emphasis on two structures here. The first one here is this descending trend line, which we are going to be using to guide our decisions for this week. And secondly is the 1.21800 area, which appears to be the neckline of a potential reversal pattern that we identified here. So let me give you a visual representation. We have price drop into the structure. We have this scenario, price was unable to break out of the previous low, then price is back into the neckline of that area. Now, to validate this reversal pattern, we want to see a breakout of this neckline and the descending trend line. You can see how interesting that trend line falls along with that neckline, retest of structure to inside an uptrend move. And in fact, I'm looking forward to capitalizing on the move even before the breakout of the neckline happen. And when we zoom in to see how market participant has been reacting to the structure since the beginning of this week, you will see here that we have a simple setup that we are going to be using to guide our decisions for today. Now, since the week began, price action has been trapped, or let me say confined, within the 1.21660 and the 1.21450 area to emphasize the level of indecision at this point. And it's quite understandable why we are having an indecision at this area. Remember, we have that descending trend line around this area. So we are caught up within the dilemma of price either respecting that descending trend line one more time to push price to the downside, or we might likely be seeing a breakout, retest to capitalize on an uptrend move. So we are at a very crucial juncture in this particular market. And of course, you know how we do it in this community. Whenever price action falls into this kind of range, giving us a flat channel like this, we have no other choice than to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And because of this idea, I had a buy stop order above the 1.21660 area, which has already been triggered, but currently running in a loss of about, let's say, about 6 to 5 pips thereabouts, and with a stop loss sitting just right below the support line at the 1.21450 area, dovetailing to about 20 pips stop loss on this one. So at this point in time, I'm still holding on to a bullish bias here. Actually, I'm still looking forward to more opportunities above the 1.21660 area, and if price continues in such a way that it breaks out of that neckline at the 1.218, then I want to feel very confident in this buy position at this point. But right now it's still looking very dicey. We're still around that descending trend line, around the resistant line of that range at the 1.21660. So I'm thinking of capitalizing on that move even before the breakout happens. But if you are a conservative trader, you might want to wait for the breakout of the 1.218 area before you want to jump into that position, and we might likely see some breakout retest into the descending trend line before that uptrend move. So you want to make your stop loss as wide as possible. Let's see how many pips that will give. From that area, around 25 to 30 pips thereabout will be most precise, taking advantage of a buy position above the 1.218 area. However, in as much as we're looking out for buying opportunities here, you know how we do it in this community, we also want to keep tabs with the opposite direction too. We want to see what the potentials of the sellers too are in this market, and what is it that we want to see on this chart that will make us feel comfortable or confident changing our bias from bullish to bearish. Now, since we already have a range, actually, as we identified this earlier, we have a range here. Now, the only condition that will make me want to sell the GBPUSD is one, price will be below the descending trend line we spotted here. That is below the descending trend line right now, where price is currently oscillating on. So price will be below the descending trend line as the first parameter. Then the second condition is price breaking down the support line out of that range, which is located at the 1.21450, which happens to be the lowest point price action has been for this week. Now, for me to sell at this area, I would rather want to see a breakdown retest of the structure for me to join that decline. Now, remember what I said here, a retest of structure is needed for confirmation before we jump into a sell position. And why we are going to be waiting for confirmation is simply because price is still sitting above a very strong demand zone, which we identified on the higher time frame. Now, if we sell, we want to be patient and be cautious as soon as price gets into that demand zone area. And if price gets into that area, move your stop losses, secure your position, and let's see how the market will react to that zone. But trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. So these are my views on the GBPUSD, sorry. So our center of focus today is basically between the 1.21660 and the 1.21450. So you do want to be marking out those levels on your chart, as we will be needing them as a reference point to guide our independent trading decisions. So I don't know if you have any questions whatsoever as regards to the current setup on our chart right now. Let me know in the comment section. As usual, I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next asset on our watch list. So any questions, please let me know in the comment section. All right, I see your comment, Mansour Ul Hassan. Good morning to you, Mansour. How are you doing today? And glad to have you around with us this morning. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. But if you still have questions, feel free to drop them in the comment section. I'm here and willing to be of help in that regard. All right, all right. So the next asset on our watch list for today is my favorite, and that is the XAUUSD, which is obviously popularly known as the gold spot. And in fact, I already have a buy position triggered on the XAUUSD too as well. So we are going to be looking at what is really happening in this market from a technical standpoint. And let me remind you once again, for those who are joining us for the first time, please do watch my video on the XAUUSD where I was able to do a top-down analysis identifying simple setups to guide our trading decisions for this week. So the links are right in the description box below of this current video, so you can check them out and look at those videos, as it will give you a background knowledge of how we actually got to this point. You will be seeing on the 1 hour time frame. So basically, we are only going to be talking about the 1 hour time frame right here. So with that being said, let's look at the current market structure. Now, since the beginning of this week, just like the other asset we have been monitoring, the week has started on an indecisive phase actually. As you will see, price is currently confined within the $1,978.50 level and the $1,965 area, to emphasize the level of indecision at this point in time. And of course, you know how we do it. Whenever we have this kind of range, we do want to exercise patience, waiting for either the breakout or breakdown of that range to give us an opportunity to either buy or sell. Now, since last week, we actually enjoyed a massive profit on the XAUUSD. Remember, we rode over 1,000 pips, had multiple entries. We were buying the XAUUSD throughout last week's trading session as we rode that move all the way to the upside. And this can be connected to the crisis in the Middle East right now. And at this point in time, last week we saw price climb up to as far as the $1,999 level, which was the highest point price action has been in a long time. And at this point in time, with the way things are going, based on what happened on Friday, looking at that sharp rejection at the 1,985 area here, it appears that the winning streak from last week is gradually pausing at this point in time. Now, price is trading below that 1,985, which happens to be our key level for this week. Now, for those who had not watched my XAUUSD, please do, so you can understand how we were able to identify the 1,985 and how we are going to be using it to guide our trading decisions for this week. Now, despite the geopolitical tensions between Israel and Hamas, which has typically boosted the demand for gold in the last couple of weeks, considering the fact that it's a very strong and popular safe haven asset, the current risk on sentiment in the market presents a little bit challenge at this point in time. Now, remember that we are looking forward to some high impact event from the United States, which it may likely affect the dollar, which is correlated to the gold at this point. Now, let us look at things from a technical standpoint here. Now, with the way things are going right now, we have our key level here, which of course price is currently trading below that structure. Now, if we look at this key level and considering how we use our key level in this community, when price trades below the key level, you know we look out for structures and patterns to support the idea of selling. But because of the fact that price has been on a strong bullish momentum, a very strong winning streak in the last 2 weeks, I'm of the opinion that we could still see price break out of the 1,985. But we need to be very, very careful here. Now, I have a breakout of structure, breakout of the resistance line right now. I'm currently running with about 40 pips in profit. Now, if price gets close to the 1,985, I will just move my stop loss to break even, secure that position, and see if the market will break out of the 1,985. And if it does break out, retest the 1,985, there is no going back for me. I will just continue buying the XAUUSD with the hopes of adding more positions. Hold on a second, I want to duplicate this. Adding more positions. Why is this giving me? Sorry, I'm just trying to. Okay. So I will just be adding more positions at the breakout of the 1,990. So I'll just mark this level out, which happens to be the highest point price action has been. in a long time. So we'll just be looking out to add more buy positions if price action goes on to break out of that structure. So at this point in time, I'm still holding on to a bullish bias based on what I see on this chart right now and based on what is happening since last week, and of course the Hamas situation that is going on in the Middle East. Majority will want to be putting their funds in a safe haven such as gold, silver, what other asset do we have there, mercury and the likes, to protect their funds, unlike currency assets. However, in as much as we're looking out for buying opportunities here, we cannot ignore the potentials of sellers. Now, one of the things I want us to look at here, if we look at things from an holistic standpoint, everything is still very, very bullish. The market sentiment is still looking very bullish, considering this ascending trend line we have here after connecting the series of higher lows. And if sellers come in at this point, I will consider that to be a retracement. If I get taken out of my buy position, I will consider it to be a retracement probably into this ascending trend line, where I want to be looking out for more buying opportunities to join the uptrend scenario. And if price breaks down the ascending trend line, then we might likely be seeing a crash back into the 1,900 area, which happens to be a formidable demand zone since the beginning of this year. So let's see how the market will play out. So if price drops and then breaks down that range and breaks down the support line of the range here at the 1,965 level, then we might likely be seeing a retracement into that ascending trend line. So we want to see a breakdown retest. We could join, then have a sell position running, after which when price gets into the ascending trend line here, we move our stop losses and secure position while we wait and see how the market is going to be reacting to that trend line to decide if we are going to be adding more sell position or getting ready for the second leg of the bullish momentum that started last week. So let's see how the market will play out. I'm very bullish at this point in time, like I told you, and I shared it with everyone on my TradingView and Telegram platform that I'm looking out for buying opportunities above the 1,978. So let's see how this will play out. So we are looking at more opportunities at the breakout of the key level. Key level at the 1,985. We're also looking out for more opportunities at the breakout of the 1,900. So let's see if this is going to happen. And if it doesn't, let's look out for selling opportunities below the 1,965. And of course, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So I don't know if you have any questions. Feel free to let me know in the comment section while I take the next 10 to 15 seconds to see if there are any questions. Then we go on to round up on this asset. Now, if you have found this content helpful and useful, please, I would really appreciate your support. Kindly give the video a thumbs up. Your likes are very valuable to me, and in fact, it also helps the algorithm push the video to a wider audience of traders who may find this content beneficial to them too. And this, in fact, the cheapest way you can support this project, and I do really appreciate your support so far. And for those who had liked so far, thank you very much. And for those who had not liked, please click the like button. It doesn't cost anything. Thank you very much as you do so. So I look forward to your questions before we round off for today's trading session. All right, thank you very much, guys. I really do appreciate your support. And I just dropped a comment I just dropped the link to the XAUUSD live window right in the comment box below. So you want to check it out, click on that link, click on the notify me button so that you can get notified as soon as we come online. For those who don't know, the XAUUSD live window was a platform born out of popular demand in this community, where we all gather there to monitor the XAUUSD, that is the gold spot, live right here during the New York session. So it usually kickstarts 5 to 10 minutes into the New York session. So we monitor price action throughout the New York session, see how we can enter new trades, see how to manage our current positions as we continue to monitor price action throughout the New York session. So I look forward to seeing you guys during that session. So click on the link, click on the notify me button, and be part of that session. So it's on this note. Oh, I see your comment, Jonah Aruna. Good morning to you, Jonah. Good morning, Ika's Diary. Good morning to you. I guess you came in late this morning. Ika's, how are you doing today? And trust you had a wonderful weekend. So it's on this note, I would like to call it a day. It has been a wonderful moment with you guys this morning. We were able to attend to 3 major assets, which will be the assets we will be monitoring throughout the course of this week, and these are the USOil Spot, the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spot. And of course, we were able to identify simple setups using fundamental tools such as trend lines, key levels, and chart patterns to gain insight into the market, and of course use that information to position ahead of the New York and London session. Please, I would encourage you to exercise patience. Very, very important. Let's allow our structure to mature before we jump into any position. So it's on this note, I wish us all the best. And for those of us who are joining for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. If you really do, I will look forward to seeing you same time tomorrow as you be part of the subsequent editions. And let me let you know that the more time you spend with us, the better you get to understand how the strategy works and eventually be able to use the information you gather here to make your own independent trading decision. So on this note, I look forward to seeing you tomorrow, same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC. And let's come back here again to see how these assets have been doing so far, and of course get ready for tomorrow's New York and London session. So do have a wonderful day, everyone. I look forward to seeing you all right in the comment section of both my Trading View Telegram platform and of course during the XAUUSD live window. Do have a wonderful evening, everyone. Bye-bye.